Hi, good evening, everybody. First of all, apologies for absence. Any apologies? No apologies. Any declarations of interest from any members? No. Okay, great. Public question times? No public questions. Member questions? No. Cool. So that brings us all the way down to item number 61 already, and to the Woking Borough Council audit results report. So I think, Helen, is this for you to lead off on, or Graham? I can see you coming off mute.
Chair, if I may just ask, if we could ask members to consider items 61 and 62 together, one being the audit report and the secondly being the accounts. Helen will obviously introduce members to the audit results report, and then happy to take questions on that and the accounts. We're asking then committee tonight to agree the report and accounts as presented, and if an agreement to delegate the final sign-off of the final adjustments and the final matters that remained outstanding, to delegate that down to yourself and to the Section 151 Deputy Chief Executive to complete that, pending anything significant coming up, in which case we would bring a further report and update back to members to this committee. Thank you, Chair.
Councillor Ross, Angus.
That won't be able to be delegated to you, will it?
Yeah, so from what I understand, the recommendation that officers are asking for tonight is that we agree the accounts and agree the audit report as it stands. And as will become clear, there's a couple of items still pending. But then we as a committee would delegate that authority to the audit committee chairman, which for the next month or so is me, and Graham Ebers to do the final sign off of the accounts. And I think to a certain degree that always needs to happen, because the audit sign off isn't final right until the very moment. But yeah, as will become clear, there's a couple of items still pending. Maria.
Yeah, that's not actually clear from the agenda tonight, that's what we were going to propose. So I don't think that we should agree that in advance, irrespective of what Graham and Helen propose or explain. It's not clear from the agenda at all, and therefore it won't be clear to any other councillors and members of the public. Yeah,
I think it's a fair point that it wasn't explicitly stated in the agenda. This would be the recommendation. There's no recommendation on the papers, which is why I think it was vital that they start off by saying actually what the recommendation is, and we'll consider the item, and then when we get to the end of it and consider what we've heard, then we can.
Yeah. Well, I would strongly object to any consideration that we should agree the audit report and the accounts, because it's not clear to members of the public. It's not clear to any other councillors, and in that way, I think it's unconstitutional. So I'm just making my position clear.
Okay, no, that's noted. We can. Yeah,
Chair,
Graham.
It's helpful. We've taken the same approach that was taken last year with the accounts and the recommendation.
Yeah, no, I remember that. And as I say, I think to a certain degree, you have to do this every single year, to a greater or lesser degree. And yeah, so I think, as we say, there's a couple of items that are still pending to a certain degree, which we can discuss, and then as a committee, we can decide at the end whether we think it's a good idea to delegate these powers to myself and to Graham Ebers. But unless there's any other questions on what the recommendation is, then I think it doesn't look like it in the room. Graham and Helen, over to you.
Okay, thank you, Chairman, and thank you, Graham, for sort of setting that out at the front, because I think that will help members' understanding of where we are as I go through this. So what I am pleased to say is that the audit work is very largely complete, notwithstanding the conversation that has just been had. And there are two issues which are very much outside the control of the council and ourselves, which I will come on to. But firstly, I wanted to update members on the outstanding areas in the report that are mentioned on page 9 of the papers. So on page 9, you have got the status of the audit, and I just wanted to run through those. So firstly, for capital receipts in advance, we've completed the additional testing that was required and we have no matters to report. For the revaluation of land and buildings, that work is completed subject to final review. Links into the next point, which is around the accounting for Elmsfield. So that's just been working through the adjustments that are required in relation to that. And those final adjustments are being worked through the ledger, is my understanding. So we have got some final checking to do on that, but and what we will do is update the report for that, and I'll come on to that shortly as well. In relation to the group consolidation workings, the work that was outstanding was really clarification questions and making sure everything tied through. There's nothing significant outstanding in relation to that, and we're reviewing the responses that we've received today, but we're not expecting there to be any further issues in relation to that. So those are the key issues. The remaining items on that list, which reference conclusion procedures, they're all things that we can't do until the end. So the two issues that that are mentioned that I've not covered already. Firstly, pensions. So when we received the assurance letter from Deloitte, they included a caveat stating that their work was ongoing because their audit is not complete. Based on their reporting to the Audit Committee at Royal Borough of Windsor Maidenhead, they're not expecting that work to be completed until later this year. We have done internal consultation to get a view from our technical team as to whether or not that material caveat can be ignored. And the view is that we can't. So until we receive a letter from Deloitte that removes the caveat, we are unable to complete our work in relation to the pensions assurances. We've written again today to Deloitte as the auditor of the pension fund, just to understand their timetable and when they think that letter will be able to arrive. The second area is something that arose actually only a few weeks ago. There was an issue raised by another firm at the NAO Technical Group. This is representatives of each firm have monthly meetings with the National Audit Office in their role as the sort of one of their roles as the oversight of local auditors. And that identified an issue in relation to infrastructure assets. In a very brief summary, infrastructure assets, things such as roads, pavements, generally quite material balances on the balance sheet. And what this firm had noted, possibly as the result of a quality inspection, but maybe not, is that a large number of councils were adding expenditure to infrastructure assets without necessarily de-recognising the asset that it was replacing. So effectively, the balance was increasing year on year without any de-recognition. So it's an issue that affects, I would say, almost all councils. There are very few that we have come across that we think are in compliance with the SIPFA code of accounting practice. SIPFA has recognised the issue. They've already set up a task and finish group that has representatives of the firms on it to try and agree a way forward. But until that has concluded, we don't know what work should be done. The options left to auditors at that point are either to effectively down pens and say we will wait for SIPFA, or to continue and potentially put some form of wording into the auditor report, which would be a modification of the report. We feel that it is right and proper, because SIPFA are already addressing that, to wait for SIPFA to conclude their work. So it's not something that was within the control of the council, and it's not something within our control. We are waiting for SIPFA to complete their work and to suggest a solution. Once that has been completed, then we will be able to update the committee, however it is formed at that stage, and be able to conclude the audit. So as a consequence, what we're planning to do is to effectively nail down all of the rest of the completion of the audit within the next week, subject to these two issues. We will provide a final audit results report when those issues have been resolved. Alternatively, if committee members would prefer, we can update the audit report for where we are at the point at which we pause, and then update again when we have the when we have the results from where we go on both the infrastructure issue and pensions. I wasn't proposing to talk in detail about the remainder of the report. What it does, as members who've been on the committee for a number of years will recognise, it sets out our findings against each of the risks that we reported to you in November as part of the audit planning report, which is in section 2. And it also highlights other issues that are arising during the audit, which are in section 6. It includes the adjustments, the known adjustments to date, and we will update those sections with the results as we've worked through, say, for example, Elmsfield. And I do want to just briefly draw your attention to the fee table that's set out on page 49, if only really to say that public sector audit appointments, PSAA, haven't yet determined the fee for 2019-20. So I just wanted to remind members that that's when we put forward a suggested fee, it has to go through the PSAA determination process. They have been particularly slow, but there has been some recent movement, and we're hoping that that will resolve in the next, I was going to say next few weeks, but perhaps I'd be better saying near future. Hopefully that's a reasonably succinct, for me, summary of where we are at. Very happy to take any questions or comments on anything that members will have spotted in the report that they would like clarification on.
Thank you. Members, any questions on that? Maria.
Thank you, Helen. I'd like to ask a few questions. So on page 11, I don't understand what the annual government statements and the WGA data collection tool. Could you explain what that's about in plain English? How?
Page 11 is a picture.
Oh, it's page 11. I've got page 11 down the side, the bigger number 11 down the side. Executive summary. It talks about the WGA data collection tool anyway.
So the whole of government accounts, which is WGA, is the data collection exercise undertaken by government each year. So we will always have reported on this, Councillor G, in our reports. It's just that this year there has been a delay by Treasury in providing the information both to the council, well, effectively to the council to be able to create, to be able to pull together the information. And that's led to then a delay in the issue of group instructions by the NAO to us as auditors over what work is required. Effectively, what the WGA tool does is to take your financial statements, turn it into a series of spreadsheets into a format in which it can be consolidated for the whole of government.
Thank you. I'd like to ask, if I may, about the government consultation on the minimum revenue provision. I note that other auditors have said that a council which uses similar accounting to this council were imprudent in not providing for the minimum revenue provision, and the consultation is quite clear that that all they're doing is clarifying what current practice should be. So I'm just wondering why you have not commented similarly to other auditors.
I can't comment on what other auditors do because the facts and circumstances at each council will be different. We have reviewed the MRP in light of the council's own policy, and we have concluded that the council has calculated MRP in line with its policy. Its policy is not out of line with the current regulations. What we're effectively drawing attention to is that there is a lot of discussion and debate around MRP. There is also a lot of public noise, obviously, in relation to a number of councils, both locally and more widely across the country. And therefore, we're suggesting it would be sensible for the council to keep that under review, which we know it is. I don't know if Graham might want to comment.
With the code, we have responded to the consultation. There are a number of areas in the consultation that aren't clear, which don't allow us to really preempt what might come out of it, or even prepare, I guess, what that might mean financially. So, as Helen and EY have suggested, we're keeping a close eye on it. And we'll make sure as soon as there's clarity from that we can act very quickly to make sure we're in line with any changes.
Thank you. If there are any changes, what do you expect the effect to be on general reserves compared to where they are now? i.e., what do you expect to go through the income and expenditure account?
We really don't know is the problem, because some of the areas that aren't clear are significant. So, for instance, whether it would be retrospective or whether it would come in on new investments from this point would make a big difference, and that's not clear. It's not clear completely, potentially, that loans may not be included, or certain loans. So there are so many question marks, which we've highlighted in our response, and we've asked for clarity as well as outlining what we think the implications are. It's impossible for us to understand what those implications will be, unfortunately.
How do you reconcile that view with the proposed changes to the law, which are in fact very limited? There's only 2 lines to changes in the law, which effectively clarify what the Treasury thinks that the current position is, rather than what councils think the current position is.
Well, I think, as has been presented in the report to you today and in previous years, we're acting in line with the law and the regulations. The new clarification or changes in clarification, when they come in, will make it clear what will change and from what point. So, as I said, for instance, whether that's retrospective or whether it's only on new investments, it's only at that point that we'll know whether we need to change and what we need to change. But as I say, at the moment, as the report outlines, we are in line with our prudent approach and with the code.
Thank you. I've got a different area, unless anybody else has got something.
Let's see, any of our members want to jump in with questions, or Abdul?
Thank you, Chairman. My question regards to page 12. It says the judgmental difference in value of 2 property include in the PPE and 1 property in IP. If you could have more clearance of that, please.
Thank you. There are further details on that in section 2 of the report. Sorry, flicking down. So there is some further explanation of those differences on
Page
22. Page 22, the 2 that are referenced. So I think the judgmental differences, one is in relation to the Carnival Pool multi-storey car park, and the other is in relation to the Wicks retail unit property valuation. You will also see it in section 4 with what the numbers are and where that would flow through into the financial statements. So that's in the summary of audit differences on page 39.
All right, thank you.
Is that sufficient, or would you like a little bit more explanation?
If possible, a little bit more.
So effectively, just in terms of how this work is done, valuations are inherently subjective, and you could probably put 3 valuers in a room and they would come up with 4 different valuation sort of figures. So in terms of what the council goes through, the council employs a management specialist to carry out a valuation. Those valuation specialists are going to have the local knowledge of the properties, and in most cases will actually have been out to visit those properties and to actually physically inspect them. And I'm aware that certainly in the case of Carnival Pool, and I think possibly even Wicks, there were physical site inspections. We use our specialists to create a range, so they will look at the information that is available to them, both from the information provided by the council, and then they will look at other information that they have based on their knowledge. But they are not local to the council, and they won't necessarily know or understand all the nuances. So our specialist does not come up with an actual number. What they will come up with is a range within which they would expect the valuation to fall. For these 2 assets, there were some differences of opinion, and there were a number of meetings between our valuers and your valuers to sort of talk that through. But ultimately, the difference between the bottom of our range, or the top, depending which way round, and your valuation was not sufficiently different for us to be concerned, and therefore we've reported it as a judgmental difference.
Thank you very much. That's absolutely clear now. Thank you.
Thank you.
Okay, should we go back to Maria?
Thank you. I'm concerned again this year that there seems to be under-resourced in the finance department. I've raised this in previous years. So this is a question for Graham, really. I'm really concerned that for a number of years in a row, there has been understaffing in the finance department, and I would like assurance that this is not leading to any specific risks in preparing these accounts and complying with the audit. I mean, that is implied in some of Helen's report. So I'd really like to know what your opinion is on that and what you intend to do.
Yeah, thank you, Councillor. So, as you'll be aware, that the council has invested into boosting the resources in finance to ensure that we provide a robust and value-add service. That resource is still coming in, so we're still not 100% up to where we need to be, and obviously it's taking time to onboard people and bring them up to skill. On top of that, the timing of this work and the ongoing impact of COVID has had an impact and made that more difficult. So the work throughout has been difficult, working remotely. I have to say, having come from another authority, the relationship with the auditors and the finance team has been excellent, and everybody's worked hard. But we are on the right trajectory. Again, we will take a lessons learned from this, and we'll sit down with the EY team and Helen and understand further areas. But that resource is now on board. There's some final pits coming in, and we should be in a much stronger position yet again next year.
Okay, thank you. I would like it noted that I raised this in previous years and was assured that all of the necessary staffing was in place and that the finance department couldn't employ any more people because that would mean surplus capacity. And now it appears that that is not the case. And I would like it noted that we should always resource the finance department to cope with ups and downs, and to make sure that risks are minimised when preparing the accounts and looking at internal control and so forth. Thank you.
Okay, thank you. Imogen.
Is there anything we can do to, obviously our delays here have been largely around the pension scheme. Is there anything we can do to ensure it doesn't continue happening? Because this seems to be a continuous problem.
If I may answer that, I don't think there is anything that the council can do. I would say that the council have been very active in following through on the issue with pensions and the delays, and trying to understand that through the Berkshire Treasurers Group and other such groups, in talking to Royal Borough of Windsor and Maidenhead. However, this is really a factor of the wider challenges in the public sector audit market, which I'm sure I've talked to the committee about before. And there is an issue when auditors there is an issue for auditors in a number of ways, and this has been flagged up in reviews such as the Redmond Review. There was a paper by the Department of Levelling Up Housing and Communities pre-Christmas talking about what action needed to be taken by a number of different parties. So audit firms, local authorities, the department itself, the NAO, the system regulator, to try and balance the market and get to a point where there was more capacity and greater resilience for firms to be able to move forward. I am in no way intending any criticism of a fellow auditor in terms of the delays in their audit, but they have issues that they are dealing with on their own audit, and that is impacting the pension fund and the completion of the audit of the pension fund. They are doing what all auditors are doing, which is to make sure that they have the right level of assurance before they put their pen to paper and sign the audit report. I think those challenges are going to continue for a while, but there is a lot of work that's going on within firms, across firms, and across the wider market to help address that. So that's my view as an auditor. I don't know if Graham, perhaps you have a view as a member, as a local authority employee.
Yeah, no, I'd echo that, and again, I've seen elsewhere the pressures on audit resources. I think, as Helen touched on, what we are also doing is keeping close liaison across Berkshire to ensure we're putting the right support and pressure on to make that move forward, but move forward sustainably, because clearly we don't want to be in the same position later on in this year when we're signing off another year's accounts. So we're doing all we can to support the right progress to ensure this isn't the same situation next year.
Okay, thank you very much. Any other questions from members? Imogen, another one?
Yeah, I probably should have declared an interest because I do have a bit of, I work for Berkshire County Council, so I have a bit of money in the pension scheme, so I'll mention that. But my subsequent thoughts are, when I was looking through this, of course, with the revaluation of the properties, how much leeway do we have before a property becomes a liability? Hopefully I'm making sense. You know, at what point do we say, how much leeway do we have to say that, you know, this property's lost value? At what point, you know, does it become a problem?
If I have a first stab, and then I may ask Mark to just add some elements. So in some ways, the property valuation becomes an issue when we want to sell it, or when there's a need to realise the value. While it sits on the books, it is a problem, but obviously not one that financially manifests itself in the bottom line. And at the moment, those investments are providing the right return and in the right place. My understanding, and I'll let Mark fill this in because I'm still picking up, is we allow and make an MRP for 10%, and we keep a close eye on the valuation should it get into that realm. Is that correct, Mark? Can you add a bit more detail for me?
Yeah, in terms of properties we've purchased under the property investment group, we assess those every year. They're revalued and we review them against how much we paid for those assets. And as Graham said, we apply a policy of making sure we're setting aside 10% MRP. So we ensure that as long as the value of the asset doesn't drop below 90%, then we're okay. And if it does, we would look to make an additional contribution to debt repayment to keep it at the 90% in line with the policy. And as Graham said, there's no intention to sell the assets, so we're continually reviewing those. And at the moment, the rental income is covering the debt costs and the interest costs. So it's actually bringing a return back to the council that can be used to fund services.
Okay, thank you very much. Members, yeah, Shahid, go ahead.
Thank you very much, Chair. Just a question I have regarding how, during the year, what are the tracking mechanisms of our accounts? And if there's any thing which needs to be triggered, how do we do that? Because quite often, sometimes we found that in the past, the information actually doesn't come out till later on. So I'm just was thinking, do we have any real-time tracking mechanism, monitoring, which will actually trigger that there is an issue here before, 6 months down the line, as it were? Do we have that in place? And if it is, what is it?
There's a detailed capital and revenue monitoring arrangement within the council. Reports are fed through departments up into the senior management team. Alongside that, our treasury management investments are monitored, and they're brought here, I think 6 monthly as well. So there's a detailed monitoring across all of our financial activity on a regular basis, depending on the flow. So our cash flow, for instance, Mark and his team will be looking at all the time, investments, and they are raised and brought through the appropriate both officer and member channels as required.
Yeah, you can follow up.
Can I just come back on that? It said it's brought after every 6 months. Is that, I mean, 6 months to me still is like a long time. Is that sort of done on a monthly basis? Is that fair to assume, or is it actually informations are released on a 6 monthly basis? I'm talking about real-time tracking, or almost real-time as possible.
The 6 month is the frequency it comes to audit committee. There's a half yearly update for treasury management, but within officers it's done much more regularly. Be done on a daily basis to some extent, although obviously with investments you need to look at it over a bit of a longer term. So there's an ongoing basis, and there's a framework of monitoring that goes through the council's finance team and senior management team. So yeah, much more frequently. 6 monthly is to this committee for treasury management.
Yeah, I asked a similar question to Graham Ebers, I think, last committee meeting when he was presenting to us, because as members we see the revenue monitoring reports and capital monitoring reports to executive every now and again, but yeah, he gave a full answer of exactly what those kind of internal controls were and how they're monitoring that on a much more regular basis. So yeah, I guess you can speak to him as well if you're interested in further detail on that. Members, Maria, go ahead.
Yeah, in the last full council meeting, there's an item in the accounts which is expenditure on Laurel Park, and the suggestion from the leader of the council was just because it was in the budget, it didn't mean that we intended to do it. So what is the status of the budget? It seems to me that it is a plan, and that if you deviate from the plan, then you have to produce a revenue monitoring report or a capital expenditure monitoring report. But if something isn't in the plan, so if something is in the plan, there's an intention to do it. Is that correct?
So is this a question on the statement of accounts, or is this a question more on the MTFP? Or
it's a question about based on the last question that was asked about the budget. If you monitor the budget, then it does rather suggest the budget as a plan, whereas the leader of the council said in the last full council meeting that just because something was in the budget didn't mean it was a plan. And I'm just confused about that. Yeah, it's in the MTFP, but the leader of the council suggested that somehow that didn't mean that it was going forward for approval. And I'm just wondering what the status of the budget is in Graham's opinion, or the MTFP. Is it a plan or isn't it?
I'm not quite sure I understand what you mean by a plan. So the MTFP is what the council agree in terms of its expenditure plan for the year. But obviously within that, for certain programs or pieces of work, it will require additional sign-off. So it may need to go through a procurement arrangement. It may need to go through a further governance, depending on what piece of work it is. But the agreement of the MTFP is the council's spend for the year, spend plans. As I say, an example of where it will need further agreement, for instance, is a capital programme, where maybe there's a large item of spend that will need to go through a procurement, and that may have to come back for further member agreement for that side of it.
So in principle, it is a plan subject to further approval, and you wouldn't put it in if it was just a thought in the air.
I'd like to understand the Laurel Park discussion to understand that I'm answering the right vein. I think it's an expectation of where you will spend your resources in the year. For some of that, you will still need to do further detailed work to ensure that number is 100% accurate, and you may well need to take that through a committee process to get approval. So it'll be different for different elements of your plan.
Okay, so it's a plan in outline, and then it is
Maria,
approved in terms of the numbers.
Maria, sorry, just to cut you off, because I think we're getting slightly sidetracked on not what we're talking about on the agenda here. And I know other questions have deviated and I've allowed this one, but I think we can move on at this point. Imogen, is it related to the accounts and the audit report?
It's sort of related to what Maria's asking.
So is that a no? Can we move on? I think that might be a no.
Would you rather I asked it later?
Okay. Any other members, have they got questions on the accounts and the audit? Because you'd have recognised we've got an awfully big agenda. Can see no one showing. So we can move forward to the recommendation now. Is it a new point, Maria? Because you've made your feelings clear on the recommendation before. I'll let you go ahead though.
Yeah, the recommendation here is to receive the Wokingham Borough Council audit results report and to receive the statement of accounts. There's no other recommendation. So either we receive them or we don't. We cannot make different decisions, in my view. Okay, no, that's noted. Your thoughts on that. Graham, can you just repeat for the benefit of those in the meeting here what it is that officers are seeking from the committee tonight?
Yes, Chair. So we're asking the committee to agree the report and the accounts as presented tonight, but to delegate the final adjustments and the sign-off of the accounts to the Chair in liaison with the Deputy Chief Exec, Section 151 officer, unless anything significant is found in those last matters, in which case we will bring a further report back to this committee.
Thank you. Shahid.
Point of clarification, Chair. The second part, if it's not delegated to the Chair, what is the downside of that? Is that the time constraint? Is that why are we asking for that, or is that something else?
If I may, Chair, so it will be a time constraint in terms of bringing all the information back to this committee to go through, in essence, as I say, if there's no significant changes, what in essence you've already seen. So there'll be a time constraint in terms of taking you through what we've been through already and information you've already agreed.
Sorry, I'm just coming back. Obviously, there's some information missing. That's why we can't verify tonight. Yeah. So what I'm saying is, what is the time constraint? When does it have to be actually submitted, the final sign off? So are we saying that we're not going to have enough time to bring it back to the committee or have another meeting? Therefore, it's best to actually delegate to the Chair and the officer. That's where I was coming from.
Helen's got a hand up. If I may, she can add, but there isn't any information missing. That the detail would be whether there's any minor adjustments in the final pieces of work that is done, and whether they're minor and therefore don't need to come back.
I was going to just add that part of the problem is that we don't know what timescale we are working to in relation to the conclusion of the infrastructure assets, or indeed the pensions. Maybe we have a slightly better idea on the pensions, in that loosely I've been told July, August. For the infrastructure assets, I don't know. It is not for me to comment necessarily on the approval processes. But what I would say is that I am very happy to update this version of the audit results report to include the adjustments, for example, for Elmsfield, that I appreciate are not included in our report, but those are all agreed and they are being worked through the financial statements. So they are not of such significance that I think it would change members' opinion this evening, but we can update that. But in terms of the actual completion of the audit, it is very difficult for us to, for either us or for Graham, to give a view as to when that might take place.
Okay, thank you. Imogen.
I understand the problem is largely when. I'm just trying to find a clear list of what we are agreeing that we would delegate. Obviously, the pensions and the infrastructure assets you talk about, are they the only two things we're talking about?
They are the only two elements of work outstanding. With pensions, I think it would be fair to say I would not anticipate there to be any changes to the numbers in relation to the work on pensions. That's a matter of receiving the assurances from the pension fund auditor. However, for infrastructure, I genuinely don't know.
That is the bit I have a problem with, but the pension thing is a fairly static number. The infrastructure asset seems rather a vague thing to be delegating to the chair. So I would be quite happy to delegate the pension piece, but maybe not the infrastructure piece, sorry.
Angus.
Thank you, Chairman. It seems to me that it's a bit unfortunate the way the recommendation has been worded, and in view of the delay with the pension fund, whether it's an important thing or not, it's still something we're delayed. I don't see any reason why the final decision shouldn't be put to this committee in its first meeting of the next year, and that would resolve the concerns that some members of the committee have got.
Yeah, and to be honest, I didn't come to this meeting tonight with a strong view, one way or another, to be honest. And actually, particularly hearing Helen's initial thoughts on timescales, that actually the pension, it sounds like we're not necessarily without wanting to put any words in anybody's mouth, that this is going to be sorted out tomorrow or sorted out in the next couple of weeks. And so we certainly have a new chair of the committee, probably when it's sorted out. And so it seems reasonable that actually the new committee, as it's constituted, has a go at approving this, even though there's only a couple of items really to talk about. So I'd like to think it wouldn't necessarily need to be a particularly lengthy discussion. Shahid.
Chair, I'm of the similar opinion as well. That's why I asked the question. If there's a time urgency, it has to be done by a certain time, then I can understand that. But if there's no time constraint and we're not sure when it is going to be, it could be 2 months, it could be 6 months. Could we not actually wait for the next committee, audit committee, and then once we know the information, we're going to get it through?
Yeah, I mean, just to put the
just trying to understand what is the urgency to actually delegate that and the reasons behind it. But if there are genuine ones, yes, I would support that. But in the absence of that, if there is no urgency, then perhaps it could be put to the next committee.
Yeah, so I mean, just to put the other side of the argument, I think the accounts were already late, to be honest. I think so. The timelines have changed on the filing of local authority annual accounts, and we're past that deadline already, as well as most local authorities, I believe. And obviously, the sooner we get this finalised and in, the better for everybody. The better, the public of the accounts, the government, and so on. And there is also there's an efficiency factor here, where actually, if it's only these two items, where the pension fund item is well known amongst the committee, certainly those who've been here for a few years, and the other one being a predominantly national issue, there's the argument that would say that actually this is not something that necessarily needs another committee. But as I say, I didn't come in with a strong view, and there are definitely two sides to the argument. Does anybody else want to raise any points on this? Maria.
How would then we determine what we're agreeing? We just say we'd received the statement of accounts and we'd received the audit reports, I'm guessing, which is what it says, without necessarily approving them?
Yes, I think I think it's been a good discussion. I think we've basically come to a consensus that, if it's not, there doesn't feel like a great sense of urgency for this committee to approve this tonight, or give the delegation to the chairman, then we don't vote on that recommendation. Would be my thoughts. Unless Madeline, let's have a talk.
You could obviously, because the officers put forward a recommendation, you could say that you note the report and then just defer the consideration of those elements to a later committee.
Yeah, that works for me. Is members happy with that? Okay, so all in favour of noting the report and postponing any judgment on the approval of them to a later meeting. Yeah, it's for both the audit report and the statement of accounts. So all those in favour of noting? Okay, thank you very much. Right, so this comes to item number 64, which is the corporate plan annual review, which I think is yours as well, Graham. Oh, sorry.
60.
Yeah, sorry. Yeah, item 63. So we've got the annual governance statement, which is Graham as well anyway. Over to you.
Thank you, Chair. So yeah, the annual governance statement. So I'm standing in as Andrew is not well to present this. The recommendation, as you will see, is to note the update, and hopefully you'll remember that this is the updated action plan that you fed into for 2021, and this shows progress against that plan. So happy to take, I guess, your comments or views, and for you to hopefully be able to note the report.
Members, any questions on this one? Angus.
Just one small point, Chairman. The ongoing one, the HR policies one, when that's finally closed off, will the audit committee be notified of that?
Yeah, we can take down a note and make sure that happens.
Yeah.
Thank you. Members, any other questions on the annual governance statement? No? Okay, so we got the recommendation here, which is to note the update. So all in favour of noting the update? Okay, thank you. That's passed. So now we are on item 64, which is the corporate plan annual review, and back to Graham.
Thanks again, Chair. So again, I'm presenting this as Andrew's unable to. Again, we're asking members to note activity from the output, and just to comment that the council has agreed the report already as a summary of 2021. So this is just noting the output from the council over the year.
If it's already been agreed by full council, then why are we looking at it?
I believe it's part of the process that you note it and note the progress made. There's an opportunity, I guess, for any questions or further input to be fed back to officers as they progress the future reports that are taken forward.
Maria, did you have a question on this?
Yeah, I just think we should.
Microphone, sorry.
I think we should abstain on this because there's just no point, because it's already been agreed by council. And I would prefer for it to come to this committee before it goes to council. If we're going to make any notes or suggestions or recommendations, this is not the way to do it.
Yeah, I think it's, from what I understand, it's good practice to consider this report alongside the statement of accounts. There's kind of a complementary document to that. I think just and so I think it's an opportunity to raise, as Graham says, to raise suggestions on it. And for my part, I think a good suggestion would be to have an appendix that list out the KPIs that are referred to. Because I think on a lot of there's various pie charts on which KPIs have been hit and which haven't. But it would be interesting, I think, for members of the public to see what exactly those KPIs are. So that's just my thoughts on it. But Shahid, you're indicating.
I think, Chair, as a matter of practice, yes, I mean, it's been agreed, right? I think I'm just hoping that next time we get this before it is approved, goes to the council. I think that'd be a better thing to do. Because any opportunity, if we make any comment now, I'm not sure what effective that is going to be. I think this has happened. I made this comment across other committees as well. It's just a matter of policy. I think, procedure or best practice. Any document which needs to be looked by we should come across before it's approved. So we can give us the opportunity to do that. So I'm just making as a general point that if it can be done next time before it is approved by the council, I think that'd be a better thing rather than it's approved and now it's come. But I personally don't think this is the right way of doing it.
Yeah, no, I think that's a fair point. And we can make sure that's fed back to the officers that are involved in the scheduling these reports and putting it together. I think it did appear on an early agenda of this committee before it went to the full council. As I think it's the general intention that this appears alongside statement of accounts, which of course should be earlier than now, because we're looking to adhere to the statutory timelines. So, but yeah, we can take the feedback and look at it for next time round. Any other comments from members, or from Graham indeed?
Thank you, Chair.
No. Okay. So can we? Let me flick forward again to make sure I get the recommendation right. So the committee is asked to note the activity and the output from the council over the last year. Just going to have a quick show of hands to note this report. Okay. Any votes against that? Any votes in abstention? Okay, thank you very much. That's passed. So now we are on to item number 65, which is the Internal Audit Charter. So Catherine, I think this one is you.
Hello, thank you, Chair, and good evening, everybody. I have 3 reports that are coming to Audit Committee this evening. The first one is item 65 in the agenda pack, which is on pages 229 to 238, and this is the 22-23 Internal Audit Charter. Now, one of the requirements of the Public Sector Internal Audit Standards, which are the professional standards for internal audit in the public sector, is to have a terms of reference for internal audit. And this includes and formally defines internal audit's purpose, authority, scope, responsibilities and reporting lines. And it's required to be approved by Audit Committee. The refresh this year has taken into account the new internal audit service that will go forward from the 1st of April, and it will sit alongside the 22-23 internal audit plan, which we'll discuss shortly as well. In the other addition to the terms of reference this time has to be incorporate the recommendations from the LGA peer review, in that the reporting lines for internal audit need to be clarified. So the charter itself is its Appendix A, which is on pages 233 to 238, and it's been brought to Audit Committee for consideration and approval.
Okay, thank you very much. Any questions on this, members? Doesn't look like it. So the recommendation on this report, number 65, is the Audit Committee is asked to consider and approve the Internal Audit Charter in Appendix A. If everyone's happy, we can go to a vote on that. So votes in favour of the recommendation. Okay, that's unanimous. Thank you. So Catherine, we can move on to item 66.
Thank you. So my second report is item 66 on pages 239 to 258, and this is the 2021-22 Internal Audit and Investigation Progress Report. And this summarises the work of internal audit and investigations in the financial year to the 28th of February 22. And this information will also feed into the annual report, which will come to a future audit committee. So the work we've undertaken, it will help to inform the head of internal audit's annual audit opinion on the council's risk management, internal control and governance framework. And given that we've been going through quite a year of transition and change for the internal audit team, firstly through the COVID and the impact on getting audits underway last year, and also the transition as we dissolve the shared audit and investigation service and set up the new service going forward from April. Against this background, I think the year to date, we've provided a good range of audit coverage and investigation coverage through that time. If I can refer members to Appendix A1, which is on pages 251 to 258, that lists the audits that we've undertaken and that were in progress at the time of preparing this report. And as you can see, there has been a focus on a range of key corporate risks. And in addition, we've previously reported on what we've undertaken to develop an annual governance statement toolkit to monitor the council's implementation of the local code of corporate governance. And since I've reported last, we've also brought most of the key financial systems work up to date, which is where some of the work was delayed because of COVID last year. The report is coming to members tonight to note the progress in delivering the audit investigation plan to the 28th of February 2022, and I'm happy to take any questions.
Thank you. A quick question from my side to begin with. So where there's a piece of work where it's still ongoing, is that automatically transferred to the next year's plan?
We are just concluding a number of audits, and they will largely be completed. We had another month, we've got March of work activity also to report. So I'm hoping that when we come back in to the next committee with the annual report, most of that work will be completed. There'll be minimum carry forward. That's what we're aiming for into the next financial year.
Okay, good, thank you. Imogen.
In terms of things like you've got climate emergency here, you've obviously had to hire some specialist skills to work on that.
Yes.
How do you determine what specialist skills you need and where do you get them from, basically?
Right, well, in a new and evolving area such as climate emergency, that was within the team, we didn't have the specific skills that were required. So we've entered into a framework agreement, an audit agreement, but as and when we require those specialist skills, we can procure them in. So it might be areas such as climate emergency. There may be some of the more specialist IT activities that we'd need to procure as well. But as far as possible, we try to undertake that work within the team. And where we do go to a co-sourced arrangement, the aim is to transfer some of those skills through the co-sourced arrangement to our own internal audit team. So that provides a training and development opportunity for members of the team as well.
Ian.
I do have some qualms about the climate emergency audit, the reliance upon some of these external statements. For example, on page 245, the last bullet point says that WBC was assessed as having the 22nd best climate emergency action plan of more than 400 local authorities in the UK and Northern Ireland. A week or two before that 22nd assessment place, the council was actually issuing communications saying it had been assessed as 8th out of 400. All of a sudden, it drops to 22nd. What was the basis of that drop, and how can we be sure that there's not going to be a massive further drop? Because if you're reliant upon people, you need to know how they're assessing it and how come it can suddenly drop from 8th to 22nd. On apparently the same basis of information.
I understand there was some more information that was taken into account across all authorities. I wouldn't want to say specifically because I wouldn't want to misrepresent the actual position, but I'm happy to provide that information back to members once I've discussed with the service, if that would be all right.
Yeah, I think that'd be great. Thank you. If you could follow up. Maria.
Yeah, first of all, I'd like to say that I really appreciate the fact that we've got the levels 1, 2, 3, 4 and 5, which sometimes were difficult to find before. So that's a real improvement and really helps reading the report. I'd like to ask a few questions. And the first one is about the SEND audit. Now, SEND it's not a particularly strong point of this council, and I'm very worried that we're deferring the audit because we are losing staff. And I'm just wondering if you can explain a bit more about that. So, I mean, that's not good in an area that's not generally regarded particularly highly. Losing staff and then deferring the audit raises a few red flags in my mind.
Yeah, I understood that there's some review going to be undertaken internally anyway in this area, but obviously I can take your comments on board, discuss further with the service whether it's something that we could work alongside them as that review gets underway.
Thank you. I've also got a question about equalities. Equalities seems to appear quite a lot on pages 252 and following, and I'm just a bit worried that we split it up so it's in lots of different areas and there's no overall overview. So some things might be carried out at one point and some carried out at another. How can we be sure that we've looked at that overall?
I think when I report back in the annual report, it will give more of the detail behind the work that we've done in those areas, which will sort of give the overall umbrella, and then you'll be able to see how these fit in to the risk itself, because this is taken from the risk register and we break it down into the various parts that we're going to review at a particular time. So when we report back, we can report back the risk. These are the elements that we've reviewed and these are the ones that we haven't, so you can get the picture from there.
Okay, thank you. And my final question, if I may, is about the cash and bank reconciliation. So in Catherine's report, it talked about a difference of about 145,000 unreconciled, and this seems to come up every year. And again, that raises a red flag for me. Why can't cash and bank be reconciled? I understand we may have a load of different accounts, but that's even more of a risk, isn't it? I'd like to see that as the top level rather than accepting anything lower. How can we get to that?
Okay, well, if I can give you some assurance that we're actually looking at all reconciliations at the moment across the council, financial and non-financial, and as part of that activity, we're able to give you some more information around that once we report. That's a piece of work that's in progress at the moment.
Thank you. I'd like to hear all of those reports. I'd like to know that reconciliations were all carried out, particularly on cash and bank, and that we don't get any differences, immaterial or not.
Yeah. Okay.
Yeah, I think some more detail on that would be reassuring for the committee.
Yeah.
Angus.
Thank you, Chairman. I'm just a bit confused about the timescales for these reports, because the end date of February seems an odd time within the year, and it doesn't seem to accord with the financial year or the municipal year. Is there a reason for that? And when will that sort of balance out?
Yes, there is. Through the course of the year, we normally report every quarter. So this is actually the Q3 report, but to make it more up to date for members, I've reported, rather than to the end of December, extended it to the end of February. So you're getting more timely information brought to you. I will be reporting again to the next audit committee, probably the June one, with the annual report, which will have the work for the full financial year. So that will be to the 31st of March. So that with the extra month's worth of work in there. So that's the reason why it looks a little bit odd, but I just thought it would be better for members to have more up-to-date information rather than me reporting to the end of December and you having the position then.
I'm sure, Chairman, we all agree that it's best to have the most up-to-date report.
Thank you.
Thank you. Imogen.
Yeah, I mean, I'm looking at the diversity and equality data collection. I know the council's doing a lot of things and to try and improve this area, but I want to know what you guys are doing in terms of asking the end users of the services we offer, their experience. So particularly disabled users, but people who live in the borough with disabilities or other areas as well. How are you going out and asking them? Or how are you asking what their feedback is, and are they getting what they want, basically, they need, basically?
Right.
Well, you're making sense.
Yes, you are. Thank you. At this stage, we're doing quite a high-level review just to look at what data is actually collected in the council. That will be one of the next phases of this piece of work, that we would actually go out and ask what data is being collected and whether it's meaningful, etc. But at this stage, it's the first piece of work we've done in this area. So it's really a snapshot of what has actually happened to date. I don't know if that explains it.
It sounds like you're just using the data that's sort of
we're seeing what data there is being collected at the moment, and we're just trying to get a picture really as to what is being collected right across the authority.
With the data that you currently have, rather than going out and talking to people out there. Okay.
At the moment, yes, we're trying to identify where the gaps might be, first of all.
Shahid.
I think just on that, right, I suppose, correct me if I'm wrong, it could be a data within what we hold, but also data with other our stakeholders as well, other partners, where we can get a hold of the data from. So my understanding is that understanding holistically the data, all what we have at the moment, and then from that we'll question what else is missing from that, and then what do we need to, when we do go out, what do we ask for? It all depends what question we're trying to answer. So that's my sort of feedback, because I've been working with the officers as well on that. So it's not just what the council holds, that's my understanding, but it's much wider than that. But you cannot move forward until you understand fully what have you got, got before you move forward.
Yeah.
Okay, thank you. Any other questions on number 66? Nope, doesn't look like it. We've got the recommendation on page 239, where we're asked to note the progress of the audit and this investigation activity against the work programme. Can I have members show in favour of that recommendation, please? Okay, thank you. That's unanimous. Which brings us to 67, which is Catherine again.
Thank you.
Over to you again. Thank you.
Thank you. Thank you, Chair. So item 67, pages 259 to 278. This is the 22-23 internal audit and investigation plan and strategy, and it aims to reflect the new approach to internal audit and investigation work from the 1st of April 22. There's two elements to the report. The first part is Appendix A, which is the internal audit strategy. This is the high-level strategy document narrative, and that supports the plan. It explains the high-level aims of the audit plan, the approach that we've taken to preparing it in terms of sources of information and consultations that we've undertaken, how we intend to deliver the audit plan with regard to resourcing, what our reporting arrangements will be, and how we intend to ensure we comply with the professional standards, that's the public sector internal audit standards that I've mentioned. Appendix A1, pages 273 to 278, presents a list of audit topics for 22-23. And this has been prepared in discussions with CLT and Directorate Management teams. The aim is that we have better links and more direct focus onto Wokingham corporate risks, but there's also links into the annual governance statement improvement plan, and we also take on board actions coming from the peer review where appropriate. And also we've taken into account any hot topic areas in the world of audit from our auditing networks. So the plan and strategy is coming to Audit Committee tonight for you to consider and approve the programme of work for the 22-23 financial year. Happy to answer any questions.
Maria.
Well, first of all, I like the layout and everything, and it's easy to see what the rationale is behind it. I think I still have a concern about staffing in the finance department, and I'm wondering whether under financial resilience and compliance there is scope, do you think, in that about looking at the staffing of the finance department and whether it's adequate, whether it's at the right level and so on, and whether it can deal with anything that might, not anything that might occur, but reasonable risks that might occur to its operation.
Okay. All right. I'm due to have some scoping meetings with Graham for that piece of work, financial resilience. So that's something that we can consider as part of that scoping, perhaps.
Yeah, I would like to see that because you were here at the beginning of the meeting, and it's been mentioned in 3 consecutive reviews by the external auditors that there is stress in terms of resources in the finance department, and I personally would like to see that because I regard that as a real risk.
Okay, members, any other questions on this report? Shahid.
Just a question, is it being considered as a risk? If it is, that it is is it on the risk register? I don't know whether the question can be answered, but I'm just thinking.
It's probably a question for Andrew, who's unfortunately not here.
Yeah. I'm just thinking that, you know, is that being considered as a risk from, and if it is it actually logged in the risk register or not? That's the question.
Yeah, and maybe kind of keep hold of that question for when this committee next looks at the corporate risk register, particularly and reviews it with, I know Graham was here last month, but he'll be back again, I'm sure, when this committee reforms, and yeah, we can look at it then. Anybody else? No, it doesn't look like it. So thank you very much for the report, Catherine.
Thank you.
We're on to the recommendation, which is on page 259, to consider and approve the draft internal audit investigation plan and strategy. So have members show in favour of that recommendation, please? Okay, that's unanimous. Thank you. Which brings us on to item number 68, which is the draft annual report from this committee, which begins on page 279. So I don't think anyone's presenting on this necessarily. It's just a document where we've got a few pages of the report of this committee, which should go to council. And so it's just an opportunity for members to raise any problems with it, any queries, anything they'd like to add. Maria.
I think we possibly need to add in something on top of page 281, because it says we're considering the statement of accounts, but in fact we've deferred the agreement. I don't know whether you want to change that report or whether you think that that's okay. Because it starts with the audit committee is required to approve the annual statement of accounts, and then it carries on, the statement of accounts will be considered. I'm just wondering whether we need to clarify that statement before it goes to council. Thank you.
Yeah, it's probably a fair point. I'll note that, and I'll take it up with Andrew about what exactly the right terminology is for that. I guess it might have had to change one way or another anyway, because we would have either considered it or not. So, okay, no, we can take that one away. Any other points from the committee? Maria.
Is it worthwhile noting that we're going to have an independent member?
I think that is
in there
mentioned.
There are 280 pages of this.
Yeah, it's only the 280 pages for that to review.
It's on page 282.
It is on the final page. It's part of the.
Oh, it is there.
The point G. Yeah. And obviously it refers to the kind of wider piece of work around our self-assessment against the CIPFA code. Okay, if there's nothing else, do we need to take any vote on that one? Just to note. So if we can note that on the proviso, obviously I'll be discussing with Andrew that particular point on the statement of accounts. Votes in favour of noting it. Okay, that's unanimous again. Thank you very much. And that brings us to the end of this final audit committee of the year. So thank you to all members for the strong engagement and the good work we've done this year. Thank you.
And thank you for being our chair for the year. Wish you well, Dan. Thanks.
Thank you.
You've done
Thank you very much. Right, good night. Thank you.